There's a $38 trillion time bomb sitting at the center of the American economy right now. And it's not a stock market bubble, it's not a housing crisis, it's not a banking collapse, it's the United States national debt. And in November 2025, that debt just crossed $38 trillion for the first time in history, hitting this milestone during a government shutdown that lasted 43 days, the longest shutdown America has ever experienced. The interest payments on this debt now exceed $1 trillion annually. That's more than the entire defense budget of the most powerful military in human history. And here's what should terrify you. This pattern has destroyed every empire that reached this same mathematical point. Let's begin. As of November 6, 2025, total gross national debt stands at $38.09 trillion. That's $2.18 trillion higher than just 1 year ago. The rate of increase, almost $6 billion per day, $249 million per hour, $4.15 million per minute, over $60,000 every single second. Stop and think about that. In the time it takes you to watch this sentence, the United States has added another $250,000 to the national debt. This isn't speculation, this is mathematics, and the math says this ends in catastrophe. Now here's where this gets worse. Interest payments on the national debt reached $970 billion in fiscal year 2025. The Congressional Budget Office projects these payments will exceed $1 trillion in fiscal year 2026, growing to $1.8 trillion by 2035. That's a 76% increase in just 10 years. Think about what that means. Interest, not defense, not healthcare, not infrastructure, just interest on money already spent, will consume nearly 15% of every dollar the federal government collects. We're not paying down the debt, we're not even keeping pace with it. We're drowning in the interest payments alone. For context, the United States defense budget in 2025 is approximately $890 billion. Interest payments have now surpassed this. America spends more money servicing its debt than it spends on the most powerful military in world history. More than it spends on Medicare. Interest is now the third largest line item in the entire federal budget, behind only Social Security and Medicare, and it's growing faster than any other category of spending. The average interest rate on total marketable debt is 3.393% as of October 2025. That's more than double the 1.625% rate from just 5 years ago. Let me show you what happens when empires reach this point. Because this isn't the first time in history a superpower has drowned in debt service. It's happened 3 times before, and every single time it followed the exact same pattern. Stage 1, military overextension. Stage 2, currency debasement. Stage 3, interest costs exceed revenue growth. Stage 4, loss of creditor confidence. Stage 5, forced austerity or hyperinflation. Stage 6, social collapse. Stage 7, the empire ends. The United States has already completed stages 1 through 3. We're entering stage 4 right now, and the timeline says we have less time than anyone imagines. Let's start with the first empire that followed this pattern, Spain in the 16th century. In 1557, King Philip II of Spain declared sovereign default. Spain at that time controlled the largest empire on earth. Silver from the New World flooded Spanish coffers. The Spanish navy ruled the seas. Spanish troops were considered invincible. The empire stretched from Europe to the Americas to Asia. And yet, Philip II couldn't pay his debts. Why? Because Spain had spent decades fighting wars across Europe. The cost of maintaining military dominance exceeded the revenue from silver mines. Interest payments on Spanish debt consumed more than revenue could sustain. By 1557, Spanish debt service had reached unsustainable levels. The crown owed massive sums to German and Italian bankers. Interest rates climbed as lenders lost confidence. Philip was forced to declare bankruptcy, defaulting on debt to the Fugger and Welser banking families. This was the first sovereign default in modern history. Spain would default again in 1560, 1575, 1596, 1607, 1627, 1647 and 1656. 7 defaults in 100 years. Each time, Spain lost more credibility. Each time, interest rates increased. Each time, the debt spiral tightened. By 1650, Spain had fallen from the wealthiest empire on earth to a second-rate power. The pattern was clear. Military overextension led to excessive borrowing. Excessive borrowing led to interest costs that exceeded revenue growth. Rising interest costs destroyed creditor confidence. Loss of confidence led to higher rates and eventual default. Default led to economic collapse. Economic collapse led to the end of the empire. Spain never recovered its position. The Spanish Empire didn't end because of military defeat. It ended because of debt. The math killed the empire before any army could. Now let's look at the Second Empire, the British Empire in the 20th century. In 1914, Britain was the wealthiest nation on earth. The British Empire controlled 1/4 of the world's land surface and 1/5 of the global population. London was the financial capital of the world. The pound sterling was the global reserve currency. British income per capita was the third highest in the world. The Royal Navy ruled the seas without challenge. And then came World War I. Britain borrowed massive sums to finance the war. By 1918, British national debt had increased to 136% of GDP. Interest payments consumed significant portions of government revenue. Britain never recovered from the debt burden of World War I before World War II began. By 1945, British debt reached 240% of GDP. This was unsustainable. Even with victory in both wars, Britain was financially destroyed. The United States became the new creditor to the world. The dollar replaced the pound as the global reserve currency. Britain was forced into austerity programs throughout the 1950s and 60s. The empire was liquidated piece by piece. India gained independence in 1947. African colonies were granted independence throughout the 1960s. The Suez Crisis of 1956 confirmed Britain's decline as a global power. By 1997, when Hong Kong was handed back to China, the British Empire had completely ceased to exist. What killed the British Empire? Not military defeat. Britain won both world wars. What killed the empire was debt. The cost of fighting those wars created debt burdens that could never be repaid. Interest payments exceeded the empire's ability to maintain global dominance. Creditors lost confidence in British finances. The pound collapsed. The empire dissolved. The pattern repeated exactly. Military overextension led to excessive debt. Excessive debt led to unsustainable interest costs. Interest costs destroyed the economy. Economic destruction ended the empire. And now, the third example, the Soviet Union. In 1985, the Soviet Union was one of two global superpowers. The USSR controlled the largest landmass of any nation on Earth. Soviet military spending rivaled the United States. The Soviet Union possessed tens of thousands of nuclear weapons. Soviet influence extended across Eastern Europe, Central Asia, Africa, and Latin America. And then the Soviet Union tried to match American military spending during the 1980s. President Reagan's defense buildup forced the Soviets to spend beyond their economic capacity. Soviet GDP couldn't support the military expenditures required to maintain parity with the United States. By 1989, the Soviet economy was collapsing. The USSR couldn't afford to maintain control over Eastern Europe. The Berlin Wall fell in November 1989. Soviet satellite states declared independence. By 1991, the Soviet Union itself dissolved. December 26, 1991, the Soviet Union ceased to exist. One of two global superpowers gone in less than 7 years. Not defeated in war, not conquered by invasion, destroyed by economic mathematics. The Soviets couldn't afford their empire anymore. Military overextension led to spending that exceeded economic capacity. Debt and fiscal crisis destroyed internal legitimacy. The empire collapsed from within. 3 empires. 3 complete collapses. Spain, Britain, the Soviet Union. Every single one followed the same pattern. Military overextension, excessive borrowing, interest costs exceeding sustainable levels, loss of creditor confidence, economic collapse, end of empire. The timeline was different for each. Spain took 100 years. Britain took 30 years. The Soviet Union took 7 years. But the sequence was identical. And now let's talk about the United States in 2025. Because right now, America is following this same sequence stage by stage. And we're further along than most people realize. Stage 1, military overextension. The United States maintains approximately 750 military bases in more than 80 countries. America has troops deployed in 170 countries worldwide. The US defense budget is $890 billion annually. That's more than the next 10 countries combined. America has been at war continuously since 2001. The wars in Afghanistan and Iraq cost over $6 trillion, according to the Watson Institute at Brown University. The war on terror continues across multiple theaters. Military commitments span the globe. This is textbook overextension. Check. Stage 1 complete. Stage 2, currency debasement. On August 15, 1971, President Richard Nixon closed the gold window. The US dollar became a pure fiat currency backed by nothing except government decree. Since 1971, the dollar has lost over 98% of its purchasing power. The Federal Reserve expanded the money supply by approximately 40% between 2020 and 2024. The Fed's balance sheet peaked at nearly $9 trillion. M2 money supply, which measures dollars in circulation and in bank accounts, increased from $15.5 trillion in February 2020 to $21.7 trillion by 2022. That's a 40% increase in the money supply in just 2 years. This is currency debasement in real time. Check. Stage 2 complete. Stage 3, interest costs exceed revenue growth. Here's where it gets critical. Interest payments on the national debt were $970 billion in fiscal year 2025. Those payments are projected to exceed $1 trillion in fiscal year 2026. By 2035, interest will reach $1.8 trillion annually. That's 76% growth in interest costs over the next decade. Now compare that to revenue growth. US federal revenue in fiscal year 2025 was approximately $4.92 trillion. Revenue growth has averaged around 3 to 4% annually over the past decade. Interest costs are growing at 7.6% annually. Do the math. Interest is growing more than twice as fast as revenue. At current trajectories, interest payments will consume 22% of all federal revenue by 2035. Net interest as a share of federal outlays is forecast to reach 13.85% in fiscal year 2026, 14.11% in 2027, and 14.52% in 2028. This is the debt spiral in motion. Interest costs are growing faster than the economy can support. Every dollar spent on interest is a dollar that can't be spent on defense, infrastructure, healthcare, or anything else. The government must borrow more to pay the interest, which increases the debt, which increases future interest payments. This is the mathematical death spiral that killed Spain, Britain, and the Soviet Union. Check. Stage 3 complete. Stage 4, loss of creditor confidence. This is where we are right now in November 2025. And here's why this stage is critical. When creditors lose confidence, they demand higher interest rates to compensate for risk. Higher rates accelerate the debt spiral. Eventually, rates become so high that the debt becomes mathematically impossible to service. At that point, the only options are default, hyperinflation, or both. So where's the evidence that we're entering stage 4? Look at what happened during the government shutdown that just ended. The national debt crossed $38 trillion during a shutdown that paralyzed the government for 43 days, the longest in American history. During that shutdown, the debt increased by $383 billion in just 23 days. That's an increase of $192,000 per second during the shutdown alone. The US added $1 trillion to the debt in just 71 days between August 12th and October 23rd, 2025. Think about what that signals to creditors. The United States government cannot function without borrowing. It cannot pass a budget, it cannot control spending. It adds debt even when the government is shut down and supposedly not spending money. This is the beginning of creditor panic. We're not in full crisis yet, but the warning signs are flashing red. The debt-to-GDP ratio currently stands at about 120%. That means US debt is now larger than the entire American economy. Economists at the Penn-Wharton budget model estimated that financial markets will not tolerate US debt levels above 200% of GDP. The Congressional Budget Office projects the debt could reach 200% of GDP by 2047. But here's the problem with these projections. They assume stable interest rates and normal economic conditions. They don't account for creditor panic. They don't account for sudden rate spikes. They don't account for loss of reserve currency status. When stage 4 accelerates into stage 5, the timeline compresses dramatically. Let's talk about what stage 5 looks like. Stage 5 is forced austerity or hyperinflation. When creditors lose confidence and demand higher rates, governments face a choice. Option 1, implement severe austerity, cut spending drastically, slash entitlements, fire government workers, shut down programs. This maintains the currency but destroys the social contract. Option 2, inflate the debt away, print money to pay obligations, let inflation erode the real value of the debt. This maintains spending but destroys the currency and savings of ordinary citizens. Both options lead to stage 6, social collapse. And here's the key insight. Every empire that reached this point chose hyperinflation over austerity. Every single one. Why? Because austerity requires political courage that democracies rarely possess. Cutting entitlements means electoral suicide. Firing millions of government workers means riots. Defaulting on obligations means revolution. So governments always choose the politically easier path. They print money, they inflate the debt away, they tell themselves they can control it. And every single time they lose control, the inflation becomes hyperinflation. The currency collapses, and the empire ends. This isn't speculation. This is historical pattern recognition, and according to analysis from JP Morgan Private Bank, this is exactly the path America is already on. In November 2025, JP Morgan Private Bank released analysis warning that America's path out of the debt crisis likely involves tolerating higher inflation and eroding Federal Reserve independence. Let me read that again. Tolerating higher inflation and eroding Fed independence. Translation: the United States will attempt to inflate away the debt. The Federal Reserve's mandate to maintain stable prices will be subordinated to the political need to service debt. This is the choice. This is stage 5 beginning. The US is not going to cut spending enough to matter. The US is not going to default explicitly. The US is going to inflate. And when that inflation becomes embedded, when it feeds on itself, when the Fed loses credibility, that's when hyperinflation begins. Now let me show you why this timeline is shorter than anyone expects. The speed of collapse depends on one critical factor: how quickly creditors lose confidence. For Spain, it took decades because information travelled slowly in the 16th century. For Britain, it took 30 years because the empire had global credibility built over centuries. For the Soviet Union, it took 7 years because command economies can delay market signals. But for the United States in 2025, information travels at the speed of light. Markets operate 24 hours a day. Algorithmic trading can trigger massive sell-offs in seconds. A loss of confidence in US treasuries could cascade across global markets in hours, not years. Consider what happens if foreign creditors decide to reduce their holdings of US debt. As of 2025, foreign investors hold approximately $7.5 trillion of US Treasury securities. Japan and China are the largest foreign holders. If these creditors begin selling treasuries to reduce exposure, interest rates will spike. Rising rates increase the debt service burden. Increased burden requires more borrowing. More borrowing requires higher rates to attract buyers. This is a doom loop, and it can happen far faster than historical precedents suggest. The Treasury must roll over approximately $9.3 trillion in debt between April 2025 and March 2026. That's nearly 1/3 of all outstanding debt. If rates rise even 1%, that's $93 billion in additional annual interest costs just on the rolled over debt. But rates won't rise 1%. When confidence breaks, rates spike. In a crisis, they could rise 3, 4, 5% or more. At 5% average rates, interest on $38 trillion would be $1.9 trillion annually. That would consume nearly 40% of all federal revenue. At that point, the government would face an impossible choice: default on obligations, cut spending by half, or print money to cover the gap. And we know which option will be chosen. The printing presses will run, inflation will accelerate, and the currency will collapse. This is the endgame of the debt supercycle. Here's what's even more frightening. The United States believes it's immune to this pattern. American exceptionalism is the prevailing narrative. The dollar is the global reserve currency. America has the strongest military. The US economy is the largest in the world. Surely this time is different. But that's exactly what Spain believed. Spain had the silver of the New World. Spain had the most powerful military of the 16th century. The Spanish Empire was the largest on earth. And Spain still collapsed under its debt. That's exactly what Britain believed. Britain ruled the waves. The British Empire spanned the globe. The pound sterling was the world's reserve currency for centuries, and Britain still collapsed under its debt. That's exactly what the Soviet Union believed. The USSR had nuclear weapons. Soviet military power rivaled the United States. The Soviet system had lasted 70 years. Communist ideology claimed historical inevitability. And the Soviet Union still collapsed in less than a decade, not from military defeat, but from economic mathematics. Every empire believes it's different. Every empire believes the rules don't apply to them. Every empire has unique advantages that supposedly make them immune to the pattern. And every empire that believed this has collapsed anyway. The math doesn't care about exceptionalism. The math doesn't care about military power. The math doesn't care about ideology or currency status or anything else. When debt service exceeds sustainable levels, the pattern completes itself with mathematical certainty. So where does this leave us? The United States has completed stages 1 through 3 of the collapse pattern. Military overextension, complete. Currency debasement, complete. Interest costs exceeding revenue growth, complete. We're entering stage 4, loss of creditor confidence. The warning signs are everywhere. Record debt crossing $38 trillion. Interest payments exceeding $1 trillion annually. Debt increasing by $6 billion per day. The longest government shutdown in history showing political paralysis. a debt-to-GDP ratio of 120% and rising, projections showing 200% debt to GDP by 2047, and analysis from major financial institutions warning that inflation is the likely escape route. Stage 5 is forced austerity or hyperinflation. Based on all historical precedent, hyperinflation is the choice. Stage 6 is social collapse. Hyperinflation destroys middle-class savings. It makes long-term planning impossible. It breaks down supply chains. It leads to shortages, hoarding, black markets, and social unrest. Stage 7 is the end of the empire, not necessarily the end of the nation, but the end of its status as a global hegemon, the end of dollar dominance, the end of American military supremacy, the end of the post-World War II order that has defined global politics for 80 years. And here's the timeline. If we're entering Stage 4 now in 2025, and if the acceleration pattern holds, Stages 5 through 7 could unfold within 10 to 15 years, maybe sooner if there's a triggering event. A major war, a financial crisis, a loss of faith in the Fed, or a creditor revolt. The pattern says this is inevitable. The math says this cannot be stopped at this point without radical action that no democracy will take. And history says that when the crisis comes, it will happen faster than anyone expects. 3 empires, 3 collapses, the same pattern every time. And the United States is following it step by step, stage by stage, as if we're reading from a script written 500 years ago. The $38 trillion debt isn't just a number. It's a countdown timer, and time is running out.